Michael Saylor's most famous line is, "Never sell." He's said it for years. He's built Strategy's entire corporate treasury thesis around it. Or he had. On May 5th, on Strategy's Q1 earnings call, Saylor told analysts, "We will probably sell some Bitcoin to pay a dividend, just to inoculate the market and send the message that we did it." The stock dropped 4% after hours. Bitcoin slipped below 81,000. Crypto Twitter lit up. But the actual story is more interesting than the headline. Here's the setup. Strategy has spent the last few years doing something most public companies don't do. It issues high-yield preferred stock. Two flavors. STRK pays 8% annual dividends. STRC pays around 10 to 11.5%. Together, those preferred shares throw off about $1.5 billion in annual dividend obligations. Historically, Strategy paid those dividends by selling MSTR common stock at a premium to its Bitcoin holdings and using the proceeds to buy more Bitcoin and fund payments. The trick is that MSTR often trades above the value of the Bitcoin it owns, a metric called MNAV. As long as that premium holds, every dollar raised buys more than $1 of Bitcoin per share. But the engine has a problem. If MSTR ever trades below the value of its Bitcoin holdings, selling shares becomes accretive in reverse. You destroy Bitcoin per share instead of creating it. That's where the new framework comes in. On the same call, CEO Phong Le put it more bluntly than Saylor did. Quote, "I believe in math over ideology. At the point where selling Bitcoin versus selling equity to pay a dividend is better for our Bitcoin per share and for our common shareholders, we'll do it." The trigger he named is when MNAV falls below 1.0. Right now it sits above 1.22. So no Bitcoin is being sold today. But the framework has changed. Saylor and Lee are now saying explicitly, "We'll sell Bitcoin when the math says it's better for shareholders than selling stock." That's not never sell anymore. Days later, Saylor clarified that Strategy plans to buy 10 to 20 Bitcoin for everyone it sells. The company stays a net buyer in his framing. And on Monday morning, Strategy announced it had purchased 535 more Bitcoin for $43 million. So in the immediate term, accumulation continues. There's also a tax angle that makes this less dramatic than the headline. Strategy has done this before. In December 2022, they sold 704 Bitcoin, then bought 810 Bitcoin 2 days later. The purpose wasn't to reduce holdings. It was tax loss harvesting. Realize losses on high-cost basis. Bitcoin, carry them back against previous capital gains, generate a tax benefit, then buy back in. Today, Strategy has a similar setup. Under accounting rules that took effect in January 2025, they have to mark Bitcoin to market every quarter. Q1 produced a $12.5 billion paper loss, which generated a $2.2 billion deferred tax asset. If they sell appreciated Bitcoin later, that tax asset offsets the gains. That's real money on a strategy that doesn't have to reduce holdings net. So what actually changed? The headline says, Saylor is selling Bitcoin. That's not quite right. What changed is the rule he's operating under. He went from never sell to will sell when it's accretive. For now, with MNAV above the threshold and Strategy still accumulating, no net selling is happening. But the framework is different, and that matters for how you read every future move Strategy makes. What to actually watch? The MNAV ratio, demand for STRC preferred stock, and whether Bitcoin grows at least 2.3% per year. Those three numbers will tell you whether Strategy is a net buyer or net seller. Anyone telling you Saylor capitulated is reading the headline. Anyone telling you nothing changed is reading the walkback. The actual change is somewhere in between, and as usual, the actual change is the one worth understanding. That's what happened. We cover crypto on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.